The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and let's check out where the markets are at right now. We got the indices pretty flat on the day. Did a little pullback overnight, but made that back up, basically later in this afternoon trading session after pulling on down there. And right now we're looking at the S&P down 4.5 points. We got the Nasdaq down 21. We have the Dow down 6, and we have the Russell down, not even 1 point right now. So basically just flat on the day. We got gold up $6 right now. We got copper down 0.5%, and we got silver, and making nice little move right there. We got silver up almost 2% on the day. Corn up 2% on the day, up 14 points. Soybeans up huge, 3% on the day right now, and up 45 points. We have oil down just 10 cents from Friday settlement there. We got natural gas is up 2% on the day. No surprise. Natural gas is always swinging wild. And looking over at euro dollar, it's up 19 pips, with Aussie dollar being up 24, US yen up 18, US Canadian down 8 pips, and US franc up 53. The dollar index overall in negative territory, but sort of some mixed results across the board. So that basket, though, showing mixed territory with the bonds with a little bit of strength to them. And right now, we got don't have a whole lot going on today, but it's definitely going to be a busy week. And looking at what we got going on, one thing you want to be aware of today is Bernanke's going to have a little speech at 4 o'clock. And you got to love it when he does that right as, the markets close there, and the cash market anyway, of course. And so, but he's going to have a little speech at 4 o'clock. It's not a press conference, it's a speech where he's speaking about monetary policy, recovery from global financial crisis, long-term challenges facing the U.S. economy. Obviously, all of those being key hot topics right now. He'll be speaking at the University of Michigan, and of course, there will be questions expected, and the markets will be listening to what he has to say in those last few minutes. And looking on over at a few other things. Let's see here what we got. Let's check it out. Trying to see if there's anything you can really just hold on to, but there's just not a whole lot besides that is happening today. Looking on over for tomorrow, we got CPI coming in, and let's see here. It's going to be on the pound. Again, the CPI. It'll be coming in, so check that out, 4:30 a.m. Eastern Time. So it'll give you a little pound-dollar trade right there. And you also have the Bank of England governor speaking, and he'll speak about 30 minutes later. And then you'll have the Bank of England inflation letter scheduled to be released sometime tomorrow. We have no idea when, but all those obviously being impactful on the pound. And if you see that positive CPI number, be looking for a nice move on up. And then looking over at core retail sales, we got core retail sales coming out later in the day, 8:30 a.m. Eastern Time. And we got PPI and then retail sales. So we got core retail sales, PPI, and retail sales all happening at 8:30. So we're going to have a little bit more excitement tomorrow morning at 8:30 when the market opens on up with all those announcements coming out, right before the market opens, and then seeing where it goes from there. And then we'll have the Empire State Manufacturing Index and the business inventory report month over month. Those are medium impact reports, but the 8:30 reports are your high impact reports. And then looking on over at what we have for Wednesday. On Wednesday, we're going to have, the core CPI coming out of the U.S. is your high impact report coming out at 8:30 a.m. And then we'll have employment change that night at 7:30 and unemployment rate. So both of those being high impact events on the Aussie dollar. And you should be looking for some strong moves on the Aussie dollar Wednesday evening. So for you part-time traders out there. And then we're going to Spanish bond auction. Spain obviously having all sorts of issues. So that is going to be an important bond auction. That'll be coming out right now. The time is set to tentative. But that'll be coming out on Thursday, January 17th. And again, we don't have the time yet, but it should impact the markets overnight. And then looking over in the U.S., we're going to have building permits and unemployment claims and housing starts all being released at the same time at 8:30 on Thursday morning. That ought to help you with trade the U.S. indices. And also you can look at, whether that gives strength or weakness to the dollar in relation to any other trades you might be in, like, say, an Aussie dollar or Euro dollar trade based on the Aussie unemployment reports or the Spanish bond reports that are coming out. Then we'll roll on over. China's going to have their GDP quarter over year come out, and so that'll be a high impact report at 9 o'clock Thursday at night. So just make sure you do have that one on there. You want to tighten your stops before that comes out, because who knows where that thing's going to go. And then we're going to have a 4:30 a.m. report over on Thursday morning on pound dollar. So big week on pound dollar. Got a lot of trades you can do each evening. Retail sales coming out again at 4:30 a.m. on Thursday or Friday morning. And then we're going to have the preliminary University of Michigan Consumer Sentiment Report. So again, that's the preliminary University of Michigan Consumer Sentiment Report. That comes out at 9:55 a.m. on Friday. And now let's go ahead and roll over and look at just a few different things we got going on. One of the, I guess, more interesting things, let's see if I can find the article here. But this is more your humor for the day. But let's see here. We got, the White House petitions. And this is probably one of the funniest ones I've seen so far. Let me see if I can pull it up for you. And over on the White House's website, they go in and they actually post it. And I'll get the exact link for you. But they go in and they actually had a petition to build a Death Star as a solution to the economic crisis. And if I can find it, it'll be, it's just, I literally, you can't help but laugh when you start reading it. And the White House actually responded to this, I guess for fun. Decided it might be sort of funny, but they went in and actually responded to the whole Death Star idea and talking about why, there was an issue there. One of their comments was, the administration does not endorse blowing up planets, so therefore that would not be an acceptable solution, though they are big on defense. So, but let's see here. I found out there's a lot of stories that came out on it, and it was just just absolute humor. People are just starting to hop on and do these White House petitions. If you haven't checked them out, you can go over and you can see responses over here. It's petitions.whitehouse.gov and see, basically what they've done. And you can look at open petitions and what they've said and, all sorts of things on here. And then, of course, after the open positions, you got the responses. And let's see here. Let's go if we can go in and there we go. There's a search. So, Death Star. Let's see if that will bring it up. It's not going to bring it up. Okay, I will find it and I will bring it back before the show's over. But it's absolutely hilarious. There's not really any bearing on the market, but it's still hilarious. One thing we did talk about last week, sort of, jokingly, is talked about the whole $1 trillion coin issue and how the idea was out there that, they could print $1 trillion coin and make, basically because the Treasury actually has the authority to present a platinum coin, and there's no, in any denomination they want, and they can just say it's worth $1 trillion. It doesn't have to be a big coin. It could be a little coin. It could be the size of a penny or dime or, quarter or whatever they want it to be. But they put this whole thing out there, and they got some senators behind it. They got some other, congressmen behind it, and even the White House said on Friday that they weren't quite ruling it out. And Clinton actually suggested this back in the 2011 fiscal crisis. And Obama said he checked with his attorneys, and they said it, would be an issue. And then the Treasury actually did float the idea past the Fed. The Fed said that they would not accept it as a form of payment, which is really ironic considering the Fed makes money out of thin air, literally. They write checks, and they just always clear, no matter what. And the Fed is not federal, I'm sure as you know. They're not a reserve. They have nothing in really truly reserve. But they're just a private entity that is given the ability to, give the fiat ruse some sort of justifiability and ensure that there's somebody there to buy the bonds when they're for sale. But even though constitutionally and legally they can't deny the coin, but they said they would. And of course, I said the biggest problem with it is, people are going, well, it wouldn't be considered, it wouldn't add to inflation, because the coin would not go into the money supply, because one of the things in the money supply requirements is you actually don't count the money that is in the Federal Reserve. That's one of the areas that when money's held in certain places, it's not counted towards money supply. And but people sort of forgot to think about, well, the reason they're paying down the trillion is to go out and spend a trillion, and that trillion will end up in the money supply. Well, come to find out, like I said, on Saturday, the Treasury went ahead and checked with the Federal Reserve to see if this might be an option that they could use, and Fed was like, no. So of course then the White House comes out and says, we checked into this, it's not going to work, just so we can go ahead and get that out of the way. And one of the things that we think you really need to be, considering is the fact that Congress needs to do its job. And, of course, they didn't say we need to figure out how to lower expenses so we don't have to keep doing this. They simply said Congress needs to do its job and let us borrow more. And that was, really the end result on that. But anyways, but I just want to give you a follow-up on that story about the proposed idea. And apparently it's not going to happen right now. So they're not making $8 trillion coins just yet. And looking on over at a few other things, one thing I like to always do is make sure we do go through our deviation levels. We'll pull those up here in a little bit, and I'll go ahead and show them to you. But I post these every night over in our diagnostic area of the member section on TFNN. And if you haven't already, hop on over to TFNN. You can check it out. You can get free access to these for 2 weeks. Just go over and click on Diagnostic Box Spread Analyzer, and you'll get free access not only to the Box Spread Analyzer and, of course, tutorials like on binaries and spreads, but you'll also get access to the deviation levels. So even if you're not trading on Nadex, these are definitely, valuable to you if you're a futures trader or a forex trader, because I go in and give you the implied deviations. These are not pivot points. These are not Fibonacci levels. They are, Fibonacci levels, by the way, I love if you use them correctly. Pivot points, not so much. Standard deviations, not really. And ATR, not really in love with that either. The main reason with all those is they're all historical. They don't really tell you anything about historical volatility. They're going to tell you about future volatility, future expected movement. And so I like to focus on that future expected movement. And on the future expected movement, what we do is we take out, okay, how do I know how far the market's going to move? Well, I let the market tell me. So the market is right over and over and over again. So you really don't want to argue with the market. And what do you mean the market? Well, by the market, what I mean is the implied volatility, which is the expected movement, is actually priced into options. So based on demand for the options and the expected move in the options, then that volatility is priced into it, and that makes the premium more expensive. And you can extract that implied volatility through some nice, long, complicated formulas. And we go through and we look at 16 different implied volatilities. We weight them and then tie them into a one-day move for up to 3 deviations. And we'll talk a little bit more at that, and we'll go in through the charts and look at sort of where the levels are at right now to see if there's any possible setups for you. But it looks like the markets are moving on up right now. There, folks. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks. Checking out where everything is sitting at right now. We want to go ahead and look over at the deviation levels, see where they're at on the market. And let me pull them up for you right now and see what opportunities may have or are presenting themselves. And let's see here, what do we got? Let me pull up the charts for you. We'll just start running on through them over here. And like I said, we got the Dow right now pushing back up, really just pushing back up to yesterday's, just past yesterday's settlement price. So no major activity yet. But we'll be watching it to see exactly how it goes. And by the way, it did just break up to that price right there without any real volume, that should be considered, I guess you could say, substantial. So just looking on, the days right there, that's pretty weak white volume right there. Doesn't mean it won't keep going. It just means, watch your trade carefully. And we do have Bernanke coming on up. So, like I said, at 4 o'clock. And let's see right now. So right now, I doubt any of the indices are hit deviation levels yet, just because, like I said, the market is so quiet. But we'll go through and we'll run through the list, and we'll see. But let's see right now. We got the S&P down at a low. Let me back on now to 10-minute bars. And all right, there we go. We got a low right here over 1460.25. Again, that's 1460.25. And looking over 1461.1, it actually did hit half a deviation right there. So the S&P actually did do that before it bounced on back up. It's still working on that retracement. It hasn't had quite the resilience so far that we've seen in some of the other markets. And let's see here. What we'll do is we'll pull up, that's the S&P. Let's go ahead and check out the other indices and just start scrolling through them. But again, 1461.1 was the negative 0.5 deviation level. If we go over and look at NQ. So one index right there is hit it. Low side here, 2719. That's actually a pretty solid move on NASDAQ. It had a lot of weight on it this morning. So I've been focusing mainly on the Dow this morning, riding that one on up. But anyway, so looking across on over here, we got a low 2719. That actually does bring us down to a full deviation move there. 2717 is a full deviation. We got a low 2719.25, but 2725. So 2725 would have been our 0.7 deviation level, and then so within like literally 2 ticks or 2 points, whatever. Like I said, over on the Dow, and to see if the overnight or high or anything actually hit one of the levels, but 13,457 would be it. 13,380, got close, but not close enough. And so the Dow has not hit it yet. The S&P and the Nasdaq have definitely been the movers there. And then let's check on out over at the Russell. So on the Russell, what we got going on is move on down to a low side of 875.1. We were looking for a move to 873.1 for a half deviation move, so it hasn't really had a half deviation either. So really the S&P and NASDAQ being the two big movers as far as moving toward those deviations, but the Dow really being the leader so far. Looking on over at natural gas. Natural gas it's just flying on up right now. And let's see here, high side. And let's see, I want to make sure we're on the right contract, but it looks like we are. So, yep, February. All right, I was like, are we supposed to be on February? Because that massive move there. But high side of 3.398, and natural gas 3.382 would have been a 0.7, and 3.405 would have been a 1 deviation move. So, almost, let's see, 3.404. Wow, so basically right on, right at a 1 deviation move. And so definitely I would not be looking to take any additional longs, and not even necessarily go short. It's be a tightening stop point. Looking over at oil. So yeah, you can't. One of the things that a lot of traders do is they do like to actually go in and do reversals off those deviations. Just make sure the market's going in your direction. Don't just go in the opposite direction just because it hit the deviation. And then high 94.29. So right there, that'll put us on just above a half deviation, 94.24. And then on the low side, low of 92.95. And that would put us almost to a negative 0.5 deviation, but not quite. So you're talking about a 1 deviation from high to low right there on the oil contract. That wraps with the indices and the 2 major energies that we follow. We'll come back, look at the metals, the ags, and the currency pairs. There, we'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going ahead and going through and checking out where everything is sitting at right now. And we're looking at the ags now. We just wrapped up the energies. We're going to go into the metals and the ags, and then wrap it up with the forex pairs. We got gold, and it's made a bit of a move there. We got a high side right now of 1674.8, pretty much on the open. And 1674.8 would put us up at plus basically a deviation. We had 1673.6. So you're talking with 1 point of the deviation move before it started pulling on back down. And then looking on over, we'll check out silver. So silver made a nice move up there, pulled back, and then closed out pretty high. We got a high side there, 31.17 on silver. And 31.17, not only does it hit the 1, but actually bumps up to the 1.5 deviation mark. So, I mean, at that 1, you're basically looking to tighten your stops. It came on up even higher, and you could have tightened it once again before it fell back down. And then if you want to take another entry, you could have had a couple decent possible entries right there. Got another one right there. And depending on your trading strategy, I like to use the simple pattern there. The alert, pivot, entry, and then confirmation or take profit right there. So silver doing pretty good. And looking on over at copper, which flew up overnight and then moved on down. The copper markets are closed now on the floor. Of course, they're still open over on the Globex. And looking over, had a high side of 3.689. 3.689 would have put us just past a 1 deviation move up. Okay, so 3.679 would have been a 1 deviation move up, and then it flies on down and comes down to a low side of 3.633. And let's see here, 3.633. Well, 3.630, okay, is a negative half deviation. So we're talking just within, barely even moving, a couple ticks there of hitting the negative half deviation. So that's basically a fall of 1.5 deviations right there. So if you're going short, then you definitely would have had at least a nice profit target to go in for, targeting the 1 deviations. And again, these levels are right here posted for you, black and white, very simple, very easy to use for profit targets, trailing stops, and potential reversal points as well. And then going on over, that puts us on copper. We'll go ahead now. We'll check out the ags. We got corn after its stellar day on Friday where it just went berserk. Looking at where it's at right now, we got to move up to 726.75 and 726.75. And it's funny, that move doesn't look that big, but it really is. But 726.75, that puts us right up there at 1.5, almost 2 deviations. So but I mean, it really happened. Like if you didn't catch it right there, right when the markets opened up yesterday, you really didn't catch it. So, because it hasn't moved at all. And then you got soybeans. Soybeans, however, on the other hand, have been trending rather well. They had a nice pop, and then they just sort of went flat overnight. And then right before the floor opened there, they decided to go ahead and rally. They're up right now about a high of 14.23. And looking over at soybeans, that's pushing a 2.5 and going for a potential third. We'll see if it actually can make it that far, but a third deviation level, which is there's a 0.3% chance it actually expires above that, but for the day. But it would actually be 1430.9. So just like I said, a stellar, massive move on soybeans. And if you haven't already tightened your stop, you should be, because that's a lot of money. And you really made it right. The big chunk was made, of course, right here, or if you were in last night. But definitely be tightening those up because, like I said, we're pushing a 3 deviation. That's a definite exhaustion point, and it doesn't happen very often at all. And let's go over. We'll look at a few of the currency pairs as well. Start off. Let's go in alphabetical order here. We'll start off with the Aussie dollar, and Aussie dollar moving up to a high there of 1.0577, and that puts us at 1.0577. Past 0.7, almost a 1 deviation move. And so right now, starting to pull back off of that level. And let's see, the 0.5 on Aussie dollar is 1.0569. And so we broke below that. It's actually treating that area now as basically a resistance level, was a support level. And often that's what you'll see with the deviations. They'll become a support and resistance. So once they're broken, then they become a resistance point. And then broken again, or a support point, and then broken down, they become a resistance point. And so markets moving on down, they could move on back down to 1.0534 potentially. But, Forex usually gets pretty quiet. I don't like to trade it that much this late in the day just because the big moves are usually in the evening or early in the morning is what I like to trade. When I'm trading Forex, I find it's a little more predictable. You have more volume and everything going on because just the Asian and European markets being open. And then going over, we got a high side on the euro dollar after a big old gap up right there, 1.3403. And looking at the high side, 1.3403, almost one full deviation. 1.3411 would have been a full deviation. And then it made a full retracement on back down. So, nice move on euro dollar, but pretty tough to get into that one if you try to trade it really, anytime after, I'd say about 7 or so, it would have been a really tough trade to hop in on. Let's see, 8 a.m., I guess, Central Time. So about 9. So basically, anytime around the market open, it's just been a little bit choppy. So you could have hopped in, and I see a few decent potential trade setups, but overall, it's not a lot I want to hop in on at this point. And looking on over at the pound dollar, now it did take just a beating before it went on up. We can see how far. Where did it hit? Well, we got a low side right now, 1.6030. On the pound dollar, 1.6030. Well, 1.6061 was our 1 deviation mark. And so that happened right here, which you can see it sort of came up here, sort of hesitated, broke through it, bounced at that 1 deviation mark. Now it's back of it, and just basically just playing right around that level. So pretty much calling it quits for the day, and almost down to the 1.5 mark. And then going on over to U.S. yen. On U.S. yen, we had a high bump up to 89.66. Again, U.S. yen, 89.66. And that puts us right there up to 0.7. And 89.62 would have been a 0.7. Didn't quite get its full deviation move. But as long as you get that 0.7, you got a place to tighten your stop. But again, a lot of movement right here just on the open on Sunday night. And then things pulled on back down, basically filled in the gap. A lot of gap fills across the currency pairs today. And then looking on over U.S. franc. So U.S. franc there, or not necessarily gap fills, more retracement back to the gaps. And on the U.S. franc side, we did have a nice, just strong move. And we saw it move on up to a high of 0.9198. But I mean, just a nice, a beautiful trend right there. And just to pull back, and looks like it may want to finish out right around that level again. But again, 0.9198, and on U.S. franc, that puts us 0.9199. It would have been 1.5. 0.9177. So right down here, we actually hit it this morning, and early this morning. That was the 1 deviation mark. And from there, I mean, like I said, you'd be, going for that 1.5 move if you're still in, if you haven't got stopped out or trailing your stop or whatever. But I can see it going back up and really pushing to hit that 1.5 deviation mark potentially before the day's over. It seems to just be, after it's made us move down, it looks like it might want to move on back up. But that's not that much. I mean, we're talking 0.9199, so we're only talking 10 ticks from there. Looking on over and checking out the USD CAD. Looking over at the Canadian there, the dollar Canadian, and moved on up. And we got a little gap down, and then pulled on up, filled that gap in. And we can see right there our highest side was 0.9865. 0.9865 took us up to just 2 ticks past, which is perfect. Half deviation mark. And before it went ahead and pulled on back down. But that gave you the clue to tighten your stops this morning. So if you're trading this, you had plenty of opportunity to go in. You had multiple opportunities where you just hitting right on it to tighten that stop up before you gave all your profits back. And one of the reasons I go over these so big and I'm so massive, about going over these every day, is you got to have risk management, but you also got to have profit management. Okay, you got to have a realistic expectation of where you think the market's going to go, and not just based on twisting your head sidewards and hoping that you make a fortune today. But having how far should the market move, and where can I tighten my stops to protect my profit, because it's not simply what you make, it's what you keep. And it doesn't matter if you're up 10 grand if you give it all back and then some. And one of the things I hate the most as a trader is letting a winning trade turn into a losing trade. And so I try to avoid that whenever possible. I think we all do. And these deviations are very helpful when you're doing trending, short-term trending moves like this to help out with that. Now, of course, if you're looking to manage your risk, the best way to do that is on Nadex. And if you hop on over to tfnn.com, then you can click over here on the Nadex banner, and you can go to our products, and you can get a demo account right there with Nadex. And it's their products, not my products, but the link is called Our Products. And you fill in your username, your first name, last name, phone number, email address. They'll send you a password. You can log in. They give you $25,000 of funny money, so you can start trading on Nadex right away. And then you go to, if you want to go ahead and fund a live account, click Create Account, and you can go from start to funded. It's only $100 to fund a fully functional live account. Okay, $100 deposit. There's no platform fees, no data fees, no subscription fees, whatever. So I highly suggest you take both of those steps and just start learning about the binaries and spreads. And, of course, you can go over, there's 2 things you can do to learn about them. One is go to the Diagnostic Box Spread Analyzer, get immediate access to the tutorials, the deviations, and the box spread scanner that I offer as well that goes in and actually scans all these trades. So if you're going in and you're wanting to go in and, buy or sell any kind of trade, let's say you're wanting to do the S&P, you think it's going to go down from here, then you can go in and say, I don't want to risk more than $100. I want at least to be able to make $1 for every dollar at risk, and it instantly brings up the possible choices for you. Well, this one's nice, but it only has 14 minutes to expiration. So I say, well, I'd like at least an hour for it to make a move, so I can make some money on it. And then we have a few other choices here. We got one at 74 minutes, which has a risk of $23. We have one at 149 minutes till expiration, till the end of the day, okay? That has $24 at risk. And, well, okay, so you're telling me $2 more of risk, and I get to the end I get another hour and 15 minutes. Yeah. And the reward, let's see, this one makes $72. This one makes $270. Well, that makes that choice pretty easy for me. Okay, I like this one much more than this one. Basically, you have more time to expiration. Basically, the exact same break-even distance move. Okay, I mean, not even a tick difference there on the S&P. Your risk is, within $1, and your reward is substantially greater. And there's one other one on here that you can check out that it shows that it also expires at $4.15, but its risk is $70 because it has a higher ceiling. Ceiling's up at $14.70. These two have a ceiling at $14.65. So the ceiling all the way up at $14.70, then I got to take on that additional risk, and that's that extra $50 of risk that's coming into play. And the reward, it may be larger, $327, but that's only if it drops all the way down to $14.30. Don't necessarily see that happening today. Okay, so and one of the things that's helpful in evaluating this is you can look at this reward risk ratio column over here, and notice how this says basically reward $2.60 for every $1 at risk, $9.68 reward potential for $1 at risk, $4.69 reward potential for every $1 at risk. And so with putting all that together, I'm able to go, you know what? These have the same time. This one has less risk, and this one has not as much max profit potential, but is a better use of my leverage money. Because, I could risk twice the amount, and that's one thing that people don't think about when they're trading these. So you go in, I could risk $27 on this one, I can risk $70 on this one. If I risk $27 on this one, I can make basically $270. If I risk about $70 on this one, I can make about $327. Why not just do two of these? Okay, I can go in and do two of them. It's like $55 in risk. Okay, and now I can make well over $500. And the way that you see that easily, again, is just by looking at your reward to risk ratio. Basically, every dollar has twice the potential on this trade as it does on this trade, because the reward here is $9 per dollar at risk, where the reward here is like $4.50 for every dollar at risk. And so that gives me a lot better trade setup. And I can go in and, like I said, very low risk and have just a ton of profit potential in my favor on that trade. And that's really what the whole box spread scanner is all about, is making trading spreads really simple for you. And, you go in and you trade them, and if you try to trade them without it, it's tough. And I'm not saying you can't do it. I'm just saying, there's a reason I made the scanner, okay? And it was because I'm going to capture this. This is a perfect example. Is because you're going through like 26 spreads, 13 long, 13 short, to find the best spread to trade. And when you're ready to hit that buy or sell button, you don't have all day to figure it out. You don't have 20 minutes to figure it out. You don't have 30 minutes to figure it out. You want to go in, and I want to buy. It's hard enough to figure out when you want to buy and sell without having to go back and look at all this different stuff and figure out how to actually calculate 13 spreads to find what's the best spread with the most time, with the best, lowest risk, with the most reward potential, with the best reward risk ratio. And once you've done all that, it's really simple. You literally just click sell, and it'll open the ticket immediately for you in Nadex, and you hit place order. So you don't have to go hunting for the spread itself inside the Nadex platform. Makes life very, very simple. All right, well, stay right there, folks. We'll be right back after this break, and I'll show you the Death Star story.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so let's check out a couple things going up. One of the things you want to be aware of is we do have the Tiger giveaway. We'll be giving away silver, so make sure you go ahead and enter for that right now. It's free to enter, and it only takes a few seconds. So hop on over to TFNN.com and register for that, and register for Ken Shreve's webinar coming right up. And then the big thing we got going on too that I want to make sure you know about. We talked about there's a lot of different ways to learn about trade on Nadex and different things. Is I'll be speaking live with Tommy O'Brien and with Dan Cook from Nadex here in just a couple weeks. And you can come to this event courtesy of Nadex. And we go right here. Going to be in Denver. They had a sort of a rough weekend this weekend at that game there in the last bit. But come and check it out. It can be dynamic trading strategies. I'm all about diagnostic trading and going into just different ways to trade on the Nadex platform. And we'll be talking about setting up dynamic trading strategies. And I'll go into diagnostic deviation levels. I'll talk about binaries and the spreads. and we're going to talk about risk and money management. We're going to talk about identifying trades and putting the whole setup together, and basically just put the whole thing together for you. And of course, be there for live Q&A, and we'll be bringing up our computers and charts, and we can answer any questions that you have. And if you've already been trading, help you take it to the next level. And if you're just curious and wanting to get into this and check it out, and this will help you get there a lot faster. So come check it out, and be glad to see you there. We'll be giving away some free, like 1 month subscriptions to the scanner. We'll be giving away silver. We'll be giving away a copy of Tommy's book. We'll be giving away a lot of different things that you can take advantage of. But the biggest thing is just the education that you're getting. And so again, that'll be out in Denver. It's going to be a beautiful time to be out there. We're going to have a good time. And I look forward to meeting a bunch of you face to face. Go ahead and register for that right now. Seating is limited. And again, it is free, but it is limited. So make sure that you are going to be able to make it if you register. And but I do recommend that you register right away before it's full, because we only have so many seats that we've set up for the free live seminar that we're going to be doing. And again, it's just education. We're there to teach you about how Nadex works and how to trade on Nadex, how to trade the spreads and binaries to limit your risk and maximize your leverage. And of course, using things like deviations to be one step ahead of the markets. And one of the things I mentioned I was going to tell you about was this whole White House petition. I'm not making this up, okay? There was a petition on the White House which got over 34,000 signatures to secure resources and funding and begin construction of a Death Star by 2016. And by focusing on our defense resources into a space superiority platform and weapons systems such as a Death Star, the government could spur job creation in the fields of construction, engineering, space exploration, and more, and strengthen our national defense. And the White House posted, "This is not the response you're looking for," but it was funny. The administration does share your job creation and your desire for job creation and a strong national defense, but a Death Star really isn't on the horizon. Here's a few reasons. The construction of the Death Star has been estimated to cost more than $650 quadrillion. We're looking hard to reduce the deficit, not expand it. Now that is ironic all in itself, because that's total crap. But anyways, the administration does not support blowing up planets. That's good. That's good. And while we would spend countless taxpayer dollars on a Death Star with a... and then why would we spend countless taxpayer dollars on a Death Star with a fundamental flaw that can be exploited by a simple one-man starship? And so, however, look carefully. Here's how you'll notice something floating in the sky. That's no moon. It's a space station. Yes, we already have a giant football field-sized space station, and they go into how there's 6 astronauts on it from Africa and Russia and Canada, and it's hilarious. So, but it's over on the petition's website, and it's something that you could share. That's just one of those fun facts. And anyways, but I thought that was sort of cool that they responded to it the way they did. It was hilarious. Anyways, y'all have a great day. Stay tuned. We have a great show coming up for you, and I will see you tomorrow.
Let me tell you something, folks. I have people coming up to me saying, "I just can't believe the amount of work that Steve does on his newsletter." And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.